I want to talk about something that happened this year. It was very quiet that came out of the Securities and Exchange Commission, but it's a very important development. And it's a very important development for particularly those of you sponsors, operators, syndicators, or investors that invest into Regulation D offerings, especially those that are relying on Rule 506C and general solicitation. What happened was in March of 2025, the Securities and Exchange Commission Division of Corporate Finance issued a no action letter in response to a request by a law firm. That law firm was Latham Watkins. And the response that came back from the Securities and Exchange Commission was very meaningful in providing guidance on exactly how issuers can verify accredited investor status without automatically having sometimes those friction-filled conversations with potential investors about give me your tax returns, what's your brokerage statements, or even potentially pushing those potential investors to utilize third-party verification services. So, what was the takeaway from what the SEC said? The SEC staff confirmed that a high minimum investment amount combined with specific written investor representations can satisfy the quote, reasonable steps to verify requirement under Rule 506C. This is a big deal, in my opinion, because under this guidance, an issuer may rely on a more structured approach that includes one, a meaningful minimum investment threshold designed to screen out non-accredited investors as a practical matter. In this particular instance, it was $200,000, right? So if you had your minimum investment set at $200,000, you've achieved essentially that one component. And two, that there's written representations from the investors confirming one, that their accredited investor status is correct under the applicable category, and two, that the investment is not being financed by a third party for the purpose of making the investment. And then lastly, that you as the issuer, the one soliciting this information from the potential investor, you don't have actual knowledge of facts that would call those representations that they just made in writing into question. Now, no, this is not a free pass. The SEC is not saying just trust the investor. The SEC is not saying utilize the same structured framework that you have under Rule 506B for your offering when you're raising capital if you're a sponsor, operator, or syndicator. What the staff is saying is that a verification is a facts and circumstances analysis, and that thoughtful deal structuring can matter just as much as the paperwork. So what does this mean in practice? Well, for sponsors and issuers, this opens the door to one, a more investor-friendly onboarding process. It reduces those kind of friction-filled conversations between sponsored operators, syndicators on the one hand, potential investors on the other hand, in Rule 506C offerings. And there's a clear defensibility when designing compliance procedures. But here's the cautionary note. The guidance does not eliminate risk. It does not automatically apply to every offering, and it does not protect against sloppy processes, right? So your subscription documents, investor representations, minimum investment rationale, and internal compliance posture still need to be aligned and defensible. Bottom line, this no action letter gives issuers flexibility, but not immunity. So if you're raising capital under Rule 506C, now is the time to reevaluate your verification procedures and make sure that they reflect current SEC staff guidance and not some outdated assumptions. If you're raising capital under Rule 506C or even considering general solicitation, this is a moment to pause and make sure that your offering structure actually reflects where the SEC staff is today, not where the market was 2 or 3 years ago. At Kelley Clark PC, we serve as outside general counsel to sponsors, operators, and investors across the full life cycle of a deal, from structuring and capital raises to regulatory risk mitigation and closing. If you're evaluating a new offering, revising your subscription documents, or simply want a second set of experienced eyes on your Regulation D compliance posture, we encourage you to get in touch with us and see how we might serve you. This is not just about checking boxes. It's about protecting your capital raise and your reputation. For those of you that are hunting for deals or in the process of doing those deals, Godspeed.